It is Tuesday, the 11th of August, 2026, and the crypto market is serving up a stark contrast. Bitcoin is hovering just shy of the $70,000 mark, a level it briefly touched yesterday after a 7% surge. Yet XRP and Ether are leading a broad altcoin sell-off. XRP has slumped right back toward the $1 psychological support, and Ethereum is shedding value as traders aggressively rotate capital into the perceived safety of Bitcoin. Almost $530 million fled BlackRock's spot Bitcoin ETF, IBIT, in a single day, marking its second worst outflow ever. So the question is not simply about a Bitcoin breakout. It is about whether the rest of the market can survive that breakout at all. Just 24 hours ago, headlines were talking about Bitcoin's 7% surge defying war panic. The Yellow.com report from late Monday noted BTC slamming into $70,000 resistance. The narrative was that geopolitical chaos was driving a flight to decentralized assets. But that story flipped fast. CoinDesk's early morning report today confirms XRP and Ether are now leading drops as traders refocus on the $70,000 Bitcoin ceiling. Why the sudden rotation? When Bitcoin approaches a pivotal level, speculators tend to dump smaller coins either to raise cash for potential BTC leverage or to de-risk entirely. The $528 million net outflow from BlackRock's ETF, reported by Yellow.com hours ago, shows institutions are not piling in blindly. They are booking profits and waiting for confirmation. This is classic risk-off behavior concentrated in the altcoin space. For XRP holders, this is a critical moment. Days ago, the token was defending $1 support, and even testing a long-term trendline that could have triggered a breakout. Now, with the broader drop, XRP is hovering dangerously close to that level again. A confirmed breakdown below $1 would invalidate the constructive structure and could open the door to the mid-$0.90 range. Ethereum is suffering from similar dynamics, amplified by fading ETF flows and the general drain of liquidity toward Bitcoin. The Bitcoin Dominance Index, which measures BTC's share of the total crypto market, is climbing, which means even a flat Bitcoin price can mask a brutal altcoin decline. This is not a narrative-driven pullback. It is a liquidity squeeze. The immediate trajectory depends entirely on Bitcoin's ability to conquer $70,000. The two-day-old research shows $67,300 was the breakout trigger, and the weekly 200-day moving average sits near $63,800. If Bitcoin pushes above $70,000 with conviction, we could see a short squeeze that temporarily lifts altcoins, but the capital rotation pattern suggests they will underperform. If Bitcoin gets rejected and slides back towards $63,800, altcoins will likely experience an even steeper flush. A third, sideways scenario would see Bitcoin range-bound between $65,000 and $70,000, giving altcoin traders brief relief rallies to sell into. Crucially, the US CPI data due this week, mentioned in the search results from 16 hours ago, could be the catalyst that decides the range break. Here is the clear conclusion. When Bitcoin knocks on a massive resistance door and altcoins are bleeding in real time, the market is telling you one thing: risk appetite is vanishing outside of the largest asset. The record ETF outflow confirms that institutional players are not yet convinced by the $70,000 breakout narrative. As a viewer, you should focus less on catching the bottom in XRP or Ether and more on what Bitcoin actually does, not what you hope it does. A daily close above $70,000 would be a game changer, but until that happens, the weight of evidence favors caution. Protect your capital. Let the breakout confirm itself. And if you are trading altcoins, pay extremely close attention to the $1 line on XRP, because that is the cliff edge.